What higher interest rate means for you and your finance and mortgage. Today, the Bank of England has doubled UK interest rate from 0.25% to 0.5% as it looks to combat rising inflation. The move marks the first back-to-back rate hikes since 2004. In December, inflation climbed to 5.4%, the highest rate since early 1990s. This was up from a decade high of 5.1% in November and more than doubled the bank's 2% target. As the Monetary Policy Committee looks to keep a lid on inflation and alleviate the cost of living crisis. What does this hike now means for you, your finance and mortgages? For the mortgage, the British households are bracing for imminent rate hike. According to the latest representative survey of 1,500 UK households compiled by IHS Markit, nearly half, 49% of UK households surveyed expect interest rate to rise in the next 3 months, the highest proportion since data collection began in July 2013, while just 6% of those surveyed in January predict a cut to interest rate at some time, down from 7% in December. Higher interest rate make borrowing more expensive. House builders have been on the back foot in recent months amid concerns that succession of rate rises could lead to a cooling of the hot property market. Borrowers on variable rates mortgages can expect the rise in interest rate to be passed on swiftly, and those who are remortgaging to a new fixed rate will feel the burden of the changes too. The first of the rate rises came hot on the heels of the last hikes and have been feeding through into mortgage deals since ever. The bank's aim is to rise rates slowly and steadily so we don't get any nasty surprises. The prices of things, household services, which include gas and electricity, were among the biggest contributor to the cost of living rise last month. The price of electricity is up by 18.8% in a year, and gas is up by 28.8%. In addition to this, the price rises are being most keenly felt in transport and fuel, as well as energy, which are areas where is unavoidable. This constitutes a bigger slice of the budget of those on a lower income. Higher interest rate will not have much effect on energy and petrol prices, as these are driven by global supply problems. Saving. About your saving, higher interest rate mean a higher return on your money. If you have variable rate saving account, the last rise helped the banks boost their margins. So they in a slightly different position now. Cole says UK banking stocks have been on the rise since December thanks to the prospect of their loan businesses becoming more lucrative. The more rises that take place, the more likely it is that rate tick up. Even among the most reluctant institutions, although very few will do so in full and most will take their time about it. So the best deal will be available to those who are prepared to shop around.